Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Tuesday, April 18th, 5:12 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market in an uptrend, still recommending we are excluding, based on the price performance, regional banks and real estate from anything we're considering due to the hangover from the bank liquidity crisis. Now, the indexes have recovered just fine. Some of the big cap banks have recovered just fine. A few of the regional banks survived earnings and have come off the lows, but when you look at what the individual indexes and sectors did today, and then you look at regional banks and see it was down 2.2% after being down as much as 2.7%, uh, you just need to stay away, as well as some of the rhetoric. Is it rhetoric? Is it fact? Reading a lot of bad stuff about office occupancy and commercial real estate selling well below what it sold for last time, and I don't know that that is going to correct itself anytime soon. COVID has changed the world. So anyway, let's get into it. Over here in the trend gauge, market leaders showing neutral. We added a green sub arrow. Uh, they held up very well today. In fact, outperformed 16 of the 21 in the uh, world famous 21 over 21 leaders list, positive on the day, and a mixed tape. We'll take that every day of the week, including several charts that we'll look at that were up for 5, 6, 7%, in fact. So good stuff there. Short term, we got our second close on small caps above the 21, but it was a lower close. We don't count that as a second close. We need to see some progress. So we're still showing the bullish arrow there, but the yellow sub arrow, because of small caps, still lagging on a relative basis. Medium term, the big cap index is above the 50-day moving average, the mid and small below, so we're neutral there. Long term, for the five indexes above their 200-day moving average, small caps continue to lag there. And again, this is hangover from the regional bank liquidity crisis. So what happened today? Really nice gap up in the morning. Uh, Made a high very quickly after the open, faded all the way to red, a little bit of a bounce, closed mixed. All in all, a bad day for the indexes, but leaders acted well relative to the indexes, as I mentioned. Here are the final numbers. RG7, this is the Revere Growth 7 ETF composite. This is how we keep our finger on the pulse of uh, growth leadership, up 0.2% on the day, led by FFTY, the second straight day of big gains for the IBD 50 ETF, outperforming very nicely, and that kind of dovetails with what we saw with some leading stocks. NASDAQ 100, basically barely green. Dow Jones Industrial Average, actually the NASDAQ 100 gapped up the most in the morning, then was down the most relative to the indexes, but came back a bit during the day. Dow barely negative, mid caps, and this was a nice comeback by the Dow, as it was very red during the day, but Goldman Sachs gapped down on a disappointing earnings report, had a very nice comeback. And we're seeing several instances of that. In fact, Netflix after hours today was initially gapped down 10%, and it's now flat despite lowering forward guidance. So maybe, a lot of the doomsdayers are saying that, oh, wait till earnings come in and you see how disappointed they are. Well, the market looks ahead, and the market may have already discounted lowered guidance, weak results. We got to go with the price action, and if bad news results in good news, we can't say but. We just got to go with what the market is telling us. So mid-caps down 0.13%, Russell 2000 down 0.4%, led to the downside by regional banks. Global diversified 60/40 stock and bond up 0.16 today. And in-house GROTECTION finally had some of our leaders have some very nice days and generate some alpha up 0.54% on the day. We'll do the tail of the tape and then we'll upgrade. Since it's Tuesday, we'll update the Titan 25. The big indexes can't break down if these 25 stocks continue to act well. And by act well, I mean, are they above their 21 and their 50-day moving average? So let's get right into it. We will start off with the S&P 500, but first we'll explain why and how we do what we do at Revere. Risk management first. Our commitment to our clients is to avoid uh, serious drawdowns, sequence of returns risk as you approach retirement. I saw somebody on Twitter claiming that the sequence of returns risk was really no big deal. You tell somebody getting ready to retire that just lost 50% of their money that sequence returns is no big deal. And it happened twice in a decade. And last year, with the market being down 27.5%, long-term bonds were down even more than that. So you can't say, well, you never get those losses because bonds, as long as you're diversified into bonds, those shield your downside. No, they don't shield your downside always. And you got to be prepared for all outcomes. And that's what we do at Revere. Interasset correlation. We discuss it every night on these videos and keep our finger on the pulse of what's happening, what's actually happening in the market, not what uh, opinions dictate. So here's the S&P 500. Let's go to a 5-minute chart. You'll see the nice gap up. We topped within the first 30 minutes. Pretty harsh sell-off, 41.69 to 41.41, and then basically a base here, little move up, and a base here. We went nowhere all day. This is a 0.25% uh, base, very tight action. This is why the VIX is as low as it is. The VIX is an indicator of volatility. And yes, the VIX is low, but volatility has been low. The daily spread has been declining. We're down from over 1.6 to 1.34 now on an ATR. And if you can see, that includes a lot of volatility from the broad sell-off from the bank crisis, mini crisis. Look how tight everything has been for the last 3 weeks. If I looked at just a 15-day ATR, it would probably be less than one. So there's your S&P 500 continuing to ride the ADMA higher. Look at the 60-minute chart here. This breakout was above this 4134 level. We broke out, failed, bounced around it yesterday, closed strongly, gapped above it today on the downside. What was today's low? Today's low was 4140, meaning we're holding this 4134. That's what we want to do. We go sideways, build another base to take off to higher highs. That's what the bulls want to see while the bears continue to cry that it shouldn't be happening. NASDAQ 100, and also gap up, as I said, the biggest gap up, but then the biggest sell off too. And then again, tight range, basically between 318 and 319. One attempt to break down late afternoon, but it was bought up. NASDAQ 100 tight, mixed on the big leaders. Semiconductors underperformed. Do note the NASDAQ 100 continues to underperform on a relative basis. Showed a little bit of strength last week, but not the last 2 days relative to the S&P 500. I talked last night, I'm going to interrupt these, and I talked last night about the breakout in semiconductors, or the potential breakout in semiconductors. Were they coiling for a move? And they got the breakout above this declining top trend lines at the open today, but you see what happened right after that. They were sold off, a little bit of a bounce into the close, but basically broke the downtrend line, but didn't break it and continued higher. This is really actually a disappointing close for semiconductors, but it did make a higher high. So if you look at a 30-minute chart, a higher high from 2 days ago is still a higher high. Really, we want to get above this 432 area to confirm a higher high in the breakout of that downtrend line. So that's semiconductors. Let's go to the Dow. Semiconductors led most of the year, but they are cyclical. And if we're going into a recession, are we going into a recession? Cyclicals should underperform. That's the um, that's the supposed market wisdom. Here's the Dow continuing to consolidate tightly here up around this 34,000 area. Let's look to mid caps, MDY, tight action above the 21. Uh, Relative strength basically in line over the last week, coming into the declining 50-day moving average. If mid caps want to do something, on the bullish side, they're going to need to get above that 50-day moving average. You now see the 200-day moving average is under this 450 level. Remember when this 450 level was just a brutal resistance area that we broke above? Then the banking crisis took hold, broke us back down above it, below it. Now, 7 sessions, 6, 7 sessions, consolidating above the 21 and above the 200-day moving average. And finally, the laggard small caps, you see how bad the relative strength line is on these. It's moderated a bit over the last week. Again, playing ping pong around the 21. We did bounce off the 21 today, just like we did yesterday. So it's second close above, but it's a lower high. We want to see a higher high above there. We've got the 50 is going to cross down through the 200-day moving average. So double level of resistance above this 180 level. 180, a big level for small caps. Let's go to the VIX now. People can't believe that the VIX keeps going lower. It's just uncalled for. Uh, but still making lower lows, down 0.71 with a 16 handle today, 0.71%. Let's flip to the dollar. Dollar was up strong the last 2 days, had a 3-day rally 2 weeks ago, but again, running into the declining 21-day moving average. That's where I've got my alert set. That might signal a change of trend. And we pulled back today. You know, a pullback in the dollar should mean good stuff for precious metals. Did it? Yes, it did. Bounced off the 21 today, up 0.4%. Gold and silver stocks, GDX up 0.73%, but closed in the bottom of its range. And high host silver up 0.56% today, consolidating inside day versus yesterday after 2 days down. So there's your precious metals. Let's flip the bonds. BND, the broad bond index, up today, very tight range, basically keeping pace with yesterday's range. So broad prices were up mildly. That means yields were lower mildly. Let's check those yields. Let's go to first. Let's go to TLT. This was up 0.36%. So is yesterday the low? We need to keep an eye on that as we own TMF, 3% TMF, which is the equivalent of 3 times TLT. And we also own a bunch of short-term bonds paying between 4 and 5%. Short-term treasury bills, let me clarify that. Short-term T-bills paying between 4 and 5%. Where were we? Yields, the 10-year TNX. Yield down today as expected after 3 days up, an inside day on the yield. TYX, 30-year, down 0.47. Looks like an inside day there also after 4 days up. Bitcoin and showed some strength, pulled back yesterday, gapped up today and held it, hasn't made higher highs. So basically, we're consolidating above the 1786 breakout level on Bitcoin. So those are the major moving averages. Let's get to the tail of the tape now. Stochastics are positive for the G6 and the indexes. NASI RSI continues to trend higher. Dollar continues to trend below the 21 EMA. VIX, we talked about that, fear and greed at a 68. You don't need to be concerned about this until we get into the extreme levels, either extreme fear or extreme greed. So AAII, we didn't cover this, but late last week, bulls dropped by about 9 percentage points from 35 and change to 26. Bears stayed about even, 34.5. The big change was most all of the bulls went to the unsure category, as this was down 9, this was up 9. Our bear case continues to, or we stay continually on the bull case as long as we're above the 21 EMA, then we'll start considering a bear case. A little bit of news today, Fed Speaker Bostic, one more rate hike, then a pause. The market seems to have priced that in, 83% of a 25 basis point hike on the next FOMC meeting, which will be 2 weeks from tomorrow. Day count from up 2 out of 3 to up 3 out of 4, 17 sessions now above the 8 EMA and the 21 EMA. Our expectations remain positive as long as we're above the 21. That's confirmed. We're trading in the range. Now, something good here, the 21 EMA, let's go back to the S&P 500, the support level, 4078. Okay, this was the high on the bounce before the bank sell-off. We came back up to it, and then we broke out above it here on that week that we had the follow-through day on Wednesday and the subsequent follow-through day on Friday. That got us above this 4078 level. Pullbacks stayed above that 4078 level, and now we've got the 21-day moving average into this 4078 level. It'll be above 4080 tomorrow. It'll probably be closer to 4084, 4085. So that's good stuff. An extra layer of support. If we should break through the 21 and we bounce at 4078, that's a very likely scenario down the road. But you can see how the pullback here was above that 4078-ish area. So good stuff there. That's the 21 EMA. Here's the action intraday. Bitcoin up. ITB home builders continuing to rocket. Semiconductors led but disappointing, closing at the bottom of the range. Gold and silver stocks and pick. This is base metal miners, favorite of Michael. Uh, Looking good today. Higher high based on recent action since the pullback and reclaim of the 50-day moving average. On the downside, the regional banks, biotech, and XLCUNV. So in the portfolio, we added to ONON, we added to NVIDIA, we bought SSO on the pullback to the top of that recent range intraday, up slightly on it. So here's what we own. Here are some tickers that we're going to show momentarily. Raised our adjusted beta from 1.26 to 1.44. And I didn't copy the bottom line. That will do right now. Live editing here. Gap up fades to red, closes mixed, but leaders act well. So let's move on. Note this 4155, that's a 50% retracement fib of the entire 2022 bear market. That's where we closed today. We went above it and failed there on 414. Obviously, we got above it there when we were at 41.99. Let's go back to the S&P 500. Obviously, we got above it back here in early February, but failed after a couple of days. So 41.45 to 41.99, the next level that we need to climb up through. Okay, let's look at some charts. ONON, we added to this today. Strength with volume out of the gate after this really tight range, low volume day yesterday. Note how the down days are being on much lighter volume than the up days. And this made a new closing high since this failed break above this little shelf here at 3320. So that's the next target level. The stochastic has hooked back up. So we added to that. NVIDIA got a double upgrade. It gapped up. Little mildly disappointing after the gap up. It based and then broke lower, but recovered somewhat into the close. So it's near these recent highs. I know people are going to start saying double top, double top. Well, guess what? Everything is a double top. And considering that on the first day that you don't get above the high that you just made, everybody can scream double top on whatever time frame you want to. So yeah, we need to break higher, but we know where our line in the sand is on NVIDIA. This tight action that we had here, the low being around 260. It's very evident on a 60-minute chart here, a little bit above 260. So like 260 to 262. Any pullback should be contained there. and we move on. So we added SSO. I mentioned that. All right. Let's go to Lulu. Not no volume, but made a higher high today. We didn't add to it, but volume has been picking up, and it's got four positive closes now after consolidating sideways after its big earnings gap. Okay, AMD, kind of a disappointment today. This pulled back. First of all, note the relative strength. We've been talking about this. It's very oversold. It was set up yesterday for a nice bounce off the 50-day. This was part of our thesis for why we bought semiconductors yesterday, but it failed into the declining 21-day moving average. So you've got two key levels here that AMD needs to hold. Bears needed above today's high. Sorry, bulls wanted above today's high. Bears want to see it below today's low, because that's also the 50-day moving average. So it's put up or shut up time for AMD. Now some strength today. DraftKings, nice break above this recent, really looks like an inverse head and shoulders. This consolidation above the 20 area on nice volume too. IoT, second strong day. See, we're seeing leadership. This is what leaders do. They follow through. They break out. They don't reverse. This is two above average volume days and a higher high on IoT. Mobileye, this has been choppy for a while, but definitely broke this downtrend today with volume. Let's go back to normal size here so we can see the volume. Volume 175% for Mobileye. A lot of people talking about, hey, this has a 6-month expiration soon. 6 months from 10/26 is around 4/26 or next week. A lot of people expecting it to break down. If a lot of people are expecting something to happen, you kind of got to think that it might not happen. Next up, more strength. Crocs actually acting better than ON. Look at these 4 straight up days on Crocs. After the earnings gap up and negative reversal put in a short-term top, then it had some heavy selling, but below the 50-day moving average. But it said loud and clear, "I'm back, baby," with the 414. That's Frank Costanza. That move above resistance on 414 when leaders started acting better. Crocs, SMCI, another one, very choppy, very tough to trade. I can't handle something that would have 3 days down like this. Its ATR is just too wide for me, but uh, it hit pivot plus 20%, hit it again, pulled back. Now it's at that level again. Um, that's an ugly base, and it's not long enough to be a true base, but price is price. And I mentioned not semiconductors, home builders acting great. DR Horton, strong above this 100 level. It's got earnings later this week. Here's ITB, the home builders, making a higher high in XHB, which has Floor and Decor as its highest, as its biggest weight. You see the little gap up today. Well, Floor and Decor had something to do with that. Here's FND with a gap up above the 100 levels. Earnings still 3 weeks away. So that's going to wrap it on the charts. Let's go very quickly to the Titan 25 Tuesday, and we've got 25 stocks here from 16 different sectors, and we're qualifying the strength on them to show all the naysaying bears that until these start to break down, the big cap indexes are going to hold up just fine. So here's relative strength. It's either positive, neutral, or negative. We've got a couple negative, neutral, relative strength, 7 of them, 9 neutral, 9 positive. And then we look, where are they relative to the 21 EMA? Are they more than 1.5% above? That's very bullish. Are they plus or minus? Plus, are they up? Okay, let me say this again. A 2.5% range above relative to the 21 EMA, we're going to give you credit as being uh, fine there. So that's what the plus minus means. If you're more than 1% below, in this case, it would actually be less than 1% below, we're going to give you yellow. If you're more than 2%, we're going to give you pink. That's for the 21-day. The 50-day, if you're more than 3% above it, you get dark green. And then we've got a 5% range here around the 50-day where we'll consider it healthy. and then you've got between 2 and 4% is yellow, 4 or more% is red. So long as you start to, and as long as we continue to see a bunch of green on here, here's the weightings of these among the three different indexes. If it's in yellow, it's weighted less than 1% relative to the index. But as long as these things hold up, uh, the market's not going to break down, and we'll check in on the Titan 25 every Tuesday. And with that, I am going to wrap it. So remember, it's not how much you make in the markets, it's how much of that you can keep. Man, that's a nice cup and handle breakout on Floor and Decor there. Uh, coming us really, it's cup and handle, cup and handle. So good relative strength on Floor and Decor. Anyway, uh, as I said, it's not how much you make, it's how much you can keep. And with that, I will wrap up Tuesday, April 18th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.